Welcome to this special edition. I want to let Lisa know I did see your comment. I asked for 20 likes and we haven't even gotten 10 yet. So on my most recent video yesterday, I said if we get to 10 likes, we'll talk about mortgage-free life. So this is for you, Lisa. Hopefully you get to see this. So before we discuss what mortgage-free life actually is, we're going to discuss what everybody's going through. Okay, not going to spend a bunch of time on it. Just want to discuss the feature. So what everybody does is basically get their income. It's this dollar. They then throw it into a bank account. After that bank account, then it goes out and pays bills, groceries, mortgage, auto loans, personal loans, student loans. And then if there's anything left over, that's what you invest. That's what you save. That's what you use for retirement. So that's typically the mechanic. Now, before we talk numbers and specifics and examples, let me share how this works. Mortgage-free life, first and foremost, is a loan. Okay? So if you need to think debt consolidation just to understand, you can do that up front. It's not debt consolidation. But what it does is it's a lump sum, it's a loan that pays off your mortgage. And instead, what you get is a HELOC. A HELOC essentially is a large credit card. Stands for Home Equity Line of Credit. Difference between this and a regular credit card that would be issued through any bank is that these credit cards have much higher limits because it's based off the home value and much lower interest rates. So very powerful. This is one of the mechanics that's in the banking system of mortgage-free life. The second vehicle that we have is an IUL. Yes, I did speak very strongly about IULs in my last video, but here I think it actually makes sense, and you'll see why when we get to the other side of this. But there are two mechanics within the mortgage-free life. And I like to compare them to draft horses. So for those of you who don't know, a draft horse actually can pull alone 8,000 pounds. When there's two draft horses together in the same carriage, they can pull up to 24,000 pounds. And I think that shows this example perfectly because together they're much greater than the individual parts alone. Okay, so that's basically the mechanics of it. To see how it actually works in real time, I do have an example here. All right, this is actually for a client that I'm meeting up with this week, or next week, excuse me. So if you happen to see this, we got some good news for you. So this is a client's example. He has about 6K in income coming in every single month. He has no debt outside of his mortgage. The home's value is about $220,000. Mortgage is only $130,000 left. 26 years left on his mortgage. Credit score of over 700. And with the credit score of over 700, then he now has access to up to 90% of your home's value. All right, if you're under 700, you have to have a minimum of 680. And then you can get up to 80% of your home's value. But in this example, the one coming up next week, we're just going to use him. So what you would do is take the value of the house, which is the 220,000, multiply it by the 90. This is the maximum home equity line of credit that he can get. This is the maximum amount on his credit card that we'll offer. So that's 198,000. Now this client doesn't need $198,000. So he said that, hey, we just can pay off the mortgage, that's fine. But I have been looking at getting a new roof. And I wanted to update my kitchen. There were some other minor things that he said he wanted to update. He said, can I take some money out? Absolutely. So we included that for him, the $40,000 here for home improvements, which gives him a total loan amount of $170,000. So this $40,000, not everybody is going to be able to take it out just for, home improvements. A lot of times what my customers or clients will do is use this extra cash that might be, in the house to pay off other debts, you know, to pay off those auto loans that are like almost equivalent to mortgages now. Pay off One Main Financial. I've seen them be very abusive to a lot of people. So, nevertheless, this is how you can consolidate your debts, lower your monthly expense, but your mortgage payment will increase. So do not be surprised when you see that. Okay. So this is the numbers. We're going to start plugging them in here to Mortgage Free Life, to the process. Okay. So what happens here is he has $6,000. That's the dollar here. Okay. We take the 6,000, bring it right here. His Mortgage Free Life is $170,000. This is the loan that we just figured out, the price for that. In case you're wondering where we got this from. Literally, boom. 170 comes from right here. 6K of income comes right here, okay? I'm not making any of this up. So he has a $170,000 loan that we built for him. 6K in income comes in and immediately pushes down the 170. So then he has $164,000 left on his home equity line of credit. But hey, wait a minute. He still has bills, doesn't he? He still has his home equity line he has to pay. You're absolutely right. So then he'll use his credit card for his bills, which are about $2,000 a month. And now he has a new home equity line of credit balance of $166. So we effectively took off $4,000 in principal in just 1 month. Month 2, we do the same thing. We'll have a $166,000 loan balance to start with. 6K of income comes in, pushes down the 166. We're now at 160. Then he pays his bills. He's up to 162. So at the end of 1 year, you'll see that he'll be down to about $144,000. So he started at 170, ends with 144. And this is all just the HELOC alone. All right. So he also has an IUL that we built in here for him specifically. So as the IUL is building, so part of this $2K a month, so his mortgage originally was $1,155. After the $40K, it went up a couple hundred. And then there was a few hundred that we actually set aside to pay for an IUL. So at the end of every 12 months, it's building cash value. I built it just so we take out $5,000 a year. So at the end of year 1, he goes from $170,000 to $139,000, all equity paid. So you'll start to see a couple of things that's pretty valuable with this structure. I mean, just alone, within year 1, he's $9,000 away from his original loan balance. He has an updated roof. He's going to have an updated kitchen. He's going to be building 2 assets at the same time. This IUL that's gaining cash value and this home that's going to gain equity. I mean, we're looking at about $30,000 minimum a year that we're able to knock out. So with those numbers, you'll see that he pays the home basically within 5 to 6 years, 2 full assets. And this is not by getting a new job. This isn't about, getting anything fancy. It's not about chasing returns or at all. This just changes what system you trust. This just changes who is benefiting. So if you want more details, like I said, you can do a couple of things. Number 1, you can go on Amazon. My book is only $9.99 on Amazon. I'll make sure to drop the link in the description below. You can go to my website. There's a lot of information on the website. Or if you guys want to set up a meeting to see if this would actually work for you, what's so nice about this is that it's a calculator. I don't decide if you get approved or not. I plug in the information and it'll let me know if it works. But Lisa, I wanted to let you know specifically, I did see your comment. I do want this to be a community. Okay, I'm not just teaching at you guys. I really want to help you go from financial literacy to financial independence. Okay, I've talked to too many people where we're now in a stage of analysis paralysis. So please, 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 guys, get on these calls before, we start blowing up and it'd be difficult to get a hold of me. All right, my Calendly link is on my website and I would love to help you all. And until next time, peace. I had a debt I couldn't pay, but he paid.
saved me, he saved me, he saved me. It's a free gift of salvation that he gave me. He keep his promises, so he will not forsake me. I'm in relationship with God, cause he made